What's up, y'all? Welcome back to another video. Today we're going to go over the basics of candlesticks. If you know nothing about candles, this is going to be the perfect video for you. We're not going to get into like all the different types of candles in the entire world or whatever, because there's a bunch of different patterns, but we're going to focus on the main candles that I use and that I think are most important for you to know. All right, so with that being said, let's get into it. So what are candles? Candles are a visual representation of what buyers and sellers are doing in the market, right? So otherwise known as price action. So stock goes up, stock goes down. How can you visually see that? Candles. That's what that is. So let's go over candlestick anatomy. And I know this may be confusing, but I promise you by the end of this, you will understand completely. So you have on the left, you have a bullish candle. On the right, you have a bearish candle. Bull means price went up. Bear means price went down. Now, here's something I want to touch on really quick before we even move on. A lot of people who are just getting into candles have this, I don't know what you want to call it, but they have this false notion that, oh, it's green, that means it's going up, I need to buy here, or there's a red candle, so I need to sell here, or whatever. That's not the way it works, right? You still have to understand price action. What I want you to understand is the color of the candle will not determine what's going to happen in the market, right? It's just letting you know what's happening with the price at that given time. So first we have a bullish candle on the left. In green, you can see it says real body, right? This is the body of the candle. Below it, you have the open. Above it, you have the close. And then you see the high, you see the low, and then you have the lower shadow and upper shadow. I promise it's not nearly as confusing as it may have seemed just now. So when a new candle opens, right, depending on what time frame you're on, let's say you're on the 5-minute candle and you know, you already had the first 5 minutes. Now it's the second 5 minutes. Well, that second 5-minute candle has to open somewhere, right? Whatever price it's going to open at, that's where the new candle is going to open. So when it says open, that's what it's talking about, right? So let's say this is the 5-minute candle. The new candle opened right here. This is where the candle started before anything else happened, right? This is where the candle started. Now, when the candle closed, the price went from down here to up here where it says close, right? So you can see that the price went from a lower point to a higher point, right? That's what made it bullish. That's why the color of the candle was green, right? Because on a basic chart, on a standard chart, green is going to be bullish, red is going to be bearish. So if you see this, you saw the candle open right here and it moved up, green candle, it closed right here, it was a bullish candle. Now you may be wondering, Isaac, what do you mean high? What does it mean low? Like, well, what is that there? What is the upper shadow, lower shadow? Now, first of all, if you're in the Blueprint Trading Group, you've heard me say the word wick before, right? We're wicking here, we're wicking at resistance, we're wicking at support. Well, that's what the lower shadow is. Instead of saying lower shadow, I call it a wick. I would say that most people call it wick. Like, I've never heard anybody say, oh yeah, we have a lower shadow at support. I've never heard that before in my life, right? So I just call, lower shadow, upper shadow, I call them both wicks. What do they mean exactly? Well, let's go over it really quick. So when this candle opened, before it closed up here, at one point during the duration of the 5 minutes, remember we used the 5 minutes as an example, at one point it came down here. This was the lowest point of the candle at one point, right? Before it went back up. And then it didn't close yet. The 5 minutes is still going on. And then it went all the way up here, right? And then eventually it closed right here, right? Now, I don't know in what order it did what. It could have went straight to the high, then all the way back down to the low, then back up again. It could have started at open and then came low first and then went all the way high. Like, who knows, right? That's not very important. But what it lets you know is that at one point, the price during the duration of this candle went as low as this. It went as high as this, right? That's all that means. And I'm pretty sure somebody figured it out just watching this. If it opened right here and the price fell below the opening price, meaning that as it went down to this low point, right, to the bottom of this wick, the candle was red at that time. Right? Why was the candle red? Because the price fell below the opening price of this candle, right? And let me give you a quick example really quick. So let's say so we have one candle right here, right? We have one candle. Let's say we have a wick right there. And then the new candle, meaning the new 5-minute candle, opened up right here, Let's say it opened up right there, right? This is how the price starts. It's not going to be a full candle because the price has to move for the candle to actually form. So let's say at the beginning of this candle, it opened right here, right? This is the opening candle. And then it immediately moved down. What's going to happen is it's going to look like this. It's going to look like this, right? And then it's going to be a red candle because the opening price is right here, right? And then it moved below the opening price, making it a bearish candle. Now, hold on now. Let's say it moved down and then it moved back up, right? This is what it's going to look like. Where am I drawing to? Tools, there we go. This is what it's going to look like. Hold on, and I don't want you to get confused. Let's just go back to our original color. Okay, that's not the original color, but you get what I mean. This is what it's going to look like. It's going to have a wick because the price at one point was way down here, right? And then as it goes up above the opening price, it becomes a bullish candle, right? Does that make sense? So if the price went below the open, then it's a bearish candle. It went above the open, it's a bullish candle. And I'm sure you already know this, but let's do it anyway. If the price were to come back down from being a bullish candle, it would simply look like this, right? And if the candle closed like this, and we'll get into different candles in a minute, if the candle closed like this, then pretty much the candle closed where it opened, right? And that's a specific type of candle. I don't want to confuse you, so I'm not going to go into it. But you can see how we have wicks on either side because at one point, the price went there at one point. Sometimes you may see a crazy candle. Like let's say, for example, right, who knows, you're playing, there's a crazy move in the market, right? You know, you may see something like this. The candle opens down here. The price surges. The price surges way up here, right? It's a crazy candle, super bullish, right? But before that candle closes, the price retraces all the way back down. And then you'll see this. And then let's say it goes red, right? The price goes below the opening price. And then it closes right there. Right? So by looking at this, you can determine that, oh, okay, at one point, the price was way up here, but then it sold off, the seller stepped in, or maybe there was profit taking, whatever, but they ended up pushing the price all the way back down, and then it closed, and the candle looked like this. But we can tell that the price was at one point during the duration of this candle, whether it's a daily candle, weekly candle, monthly candle, 5 minute, 1 minute, hourly, whatever it is, you can tell that at one point during the duration of that candle, the price was way up here. So at this point, I'm pretty sure you guys already know, how this works. But for the sake of it, let's go over this candle really quick. Obviously, this is the bearish candle. But as you can see, we have our open price right here. The price at one point was bullish and went up here to the high. As you can see, it started wicking. Seller stepped in, pushed the price back down, right? At one point, it went all the way down here to the lower shadow or lower wick. And then the buyer stepped in. And then when the candle closed, it closed right here, making it a bearish candle because the price was up here when it opened and it closed down here, right? All right. If you need to review that again before we move on, do that. But I think that was pretty simple. I think I did a pretty good job explaining that. Hopefully you guys think the same. So anatomy continued. And I actually had this slide in here because I was going to show you what I already showed you. But because I have it in here, I guess let's go over it. Just a really quick review, really quick. So price opened, right? Price moved down initially, right? Price moved down, right? Let's say that candle closed like that. And then you have another candle right here. Boom, another bearish candle. Right, price moved down again, right? Oh, but before the candle closed, the seller stepped in again. The seller stepped in. Oh, and they're pushing the price all the way up. And the sellers ended up, the buyer stepped in. The buyer stepped in and pushed the price all the way up. And then the candle closed. But don't forget, we need a visual representation that the price at one point was down here. But the seller stepped in, pushed it all the way back up for whatever reason. But you can see that was That's our anatomy, right? That's how candles work. So hopefully that's pretty clear for you guys. So understanding candles and time frames. What do I mean by this? Well, there's something called multi-time frame analysis, and pretty much what that is you being able to look at a stock on multiple time frames: daily, 15-minute, hourly, 1 minute, 5 minute, 30 minute, 4 hour, wherever it is. You're able to view candles on different time frames. But there's something I want to make sure you understand, and it may seem obvious, but if you're new to candles, you need to know this information because it can be confusing. Now, let's talk about it. On the 1 minute chart, you need 5 1-minute candles to make up 1 5-minute candle, right? On the when you go to the 5-minute chart, 3 5-minute candles equal 1 15-minute, 2 15-minute, 1 30-minute, 2 30-minute, 1 hourly, 4 hourly, 1 4 hour, 2 4 hour candles equal 1 daily candle. And just in case that confuses you, let's go to some charts. So check this out. Right now, we're looking at SPY, and right now let's go on the 1 minute chart. So right now we're on the 1 minute chart for SPY, right? And I want to zoom all the way in so you can really see what I'm talking about. So look at this. So I want to highlight the first 5 candles right here. Let's go my highlighter tool. Boom. So 1, 2, 3, 4, 5. Right? So we have 5 candles right here. As you can see, I've highlighted the first 5. 1, 2, 3, 4, 5. These 5 candles on the 1 minute chart equal 1 5-minute candle on the 5-minute chart, right? So let's go ahead and move on to the 5-minute chart really quick. Hold on, it zoomed me out. Because there's less candles on this chart, it did zoom me out. So that's why I highlighted it so I don't lose it. But hold on, I gotta zoom out and find it again. All right, there we go. All right, so you see that purple box? You see that candle that's inside that box? That's the first 5 minutes of the day, right? But remember, this 1 5-minute candle equals 5 1-minute candles, right? And if we zoom out again and then zoom back in so we can see, right? I went back to the 1 minute chart. You can see that we have those 5 1-minute candles highlighted. Right, let's go on the 5-minute chart again. Let's see, let's get a good one. Let's go back to market open right here. All right, check this out. Right, so you have 1, 2, 3 5-minute candles. Right, you got the 3 5-minute candles right there. And then if we go on the 15-minute, let's see where that box is. And if you're wondering how I keep losing it, it's because that if there's less candles, so when I go to a different time frame, the look is different. And that's why multi-time frame analysis is important, because it gives you different looks on the stock. So you can get as much information as possible when looking at making a play. And you've seen me do it on my other trade breakdown videos. But you can see, or on the 5-minute time frame, we had 3 candles highlighted, and then on the 15-minute candle, or in the 15-minute chart, we only have 1 candle highlighted, right? And I won't go through all of it, but you guys get the point. So just understand that the bigger the time frame, the less the candles. The smaller the time frame, the more candles you'll have. So let's go ahead and go back on this. So listen up. Now we're going to get into the patterns. Now that you understand how they open, close, bullish, bearish, you understand what the body of the candle is, the wick, and all that good stuff. Let's go over the key thoughts I want you to have. All right. So before we go into different patterns, I want you to say this out loud, because I know a lot of people get confused on this all the time. Say it out loud for me. All right. Candlestick patterns carry more weight on bigger time frames near key levels. Candlestick patterns carry more weight on bigger time frames near key levels. And I'm gonna go into some examples as we go into the different candlestick patterns and things. But I want you to understand this. So when we get into it, you could have that in your back of your head. Candlestick patterns carry more weight on bigger time frames and near key levels. Secondly, the name of the candle doesn't matter. Only my understanding of the price action. I mean, you wouldn't be surprised how many people argue about what's what. Oh, is that pattern? Oh, is that? No, that's not the name of the candlestick. It's this one. Like, no, it's that. It's this. Like, it doesn't matter. As long as you understand what the price action means, then you're good. I don't know the name of a lot of candlestick patterns, but I can look at it and understand what's happening with the buyers and sellers because I understand the candle. Even if I don't know the name of it, the name doesn't make you any money, but the understanding of the price action will make you money. So first things first, we have an engulfing candle, right? There's a bullish engulfing candle, and there's a bearish engulfing candle. These are probably the two most popular candles just because they're super simple. And pretty much what an engulfing candle what an engulfing candle is, it's a candle that completely consumes the body of the previous candle before it. For example, this candle right here is much smaller than this candle, and this candle is completely covering this candle. You could literally fit, this bearish candle inside the bullish candle. This is called a bullish engulfing. And as you can see, we have our support level right here, signifying that this is a key level. So remember when I said candlestick patterns carry more weight on bigger time frames and near key levels. Key levels. What do I mean by key levels exactly? I only want you really looking for candlestick patterns near support or near resistance, right? Or maybe if you have a chart pattern going on and obviously you want to play out that chart pattern, then yeah, you want to make sure you're, that's what I mean by key level. But support, resistance, and other key levels, that's when you want to look for these candlestick patterns, not just in the middle of nowhere, right? And let me actually give you a solid example. All right, so I brought you guys to the sketch pad. Let's go over this real quick. So we have our resistance level and we have our support level. Now, let's say we have price action, right? We have just candles everywhere. We have candles, right? We're on a bullish trend. We're moving up, right? Little retracement right there, right? But we're bullish. And then we get to our resistance level, right? Let's say we see this as our next candle, and this is a bearish candle, and this is a bullish candle, right? This is called a candlestick reversal pattern. This is a bearish engulfing, right? Bearish engulfing candlestick pattern. Remember, we have a bullish candle or a bullish move up. We're on an uptrend. We get to our resistance level, and then we have a bearish pattern that completely consumes the candle before it. That's a bearish engulfing pattern. And then that lets us know that we should look for a entry for a move down. Right. And there's other factors. Don't just enter based off one single candlestick pattern. But I'm just trying to give you an idea of what we would be thinking. Right. So if I were to look at this stock, whatever this is, and made a move up, and then we hit our resistance level, and next thing you know, we have a bearish engulfing, I'll be like, okay, that I know what this means. I know what's likely to happen, or the probability of what may happen next. Right. And let's say we do get a move down. Right. Boom. Awesome. We hopped in puts. Next thing you know, we're on the way down, right? We're bearish. And then the next candle, now we're at support. The next candle, boom, look at that. Now we get a bullish engulfing, right? We have a bullish engulfing candle now. This is a bearish candle right here, bullish engulfing. Now we may look for another reversal, right? Because we bounced off a key level, support or resistance. And what I'm not going to do is, see we have price action, right? And all of a sudden we get maybe a really bearish candle and then just hop in puts. Oh, it's a bearish engulfing. Let me hop in. No, I want to wait till we're at a key level, right? Because who knows? It may just, look at that. It may just be a reversal, right? Or not a reversal, a continuation. You never know, right? So to eliminate the factor of, or eliminate the possibility of accidentally getting faked out, you always want to wait until these candles are at a key level. All the time, key levels. That's you. I'm telling you, because a lot of times people will see a bullish engulfing, bearish engulfing in the middle of just in the middle of price action, and then just try to make a play, right? You want high probable setups, so you want to take. You want to take plays at support. You want to take plays at resistance or out of a pattern. and use these candles as extra confirmation for those plays. Next, we have a hammer and pin bar. This is by far one of my favorite patterns. Now, like I said, don't worry about the name of it. Who cares? I honestly don't care. But this is called a hammer candle, or some people call it a pin bar. And this is an inverted candle, inverted hammer. So what these do, these are like probably the best bearish or bullish reversal patterns or reversal candlestick patterns you can get, because these signify lots of buying pressure or lots of selling pressure. Now, why is that? Remember what we talked about the opening price and then the closing price and then the wick. Now, for this candle right here, you can see that at one point, or you can see that the candle opened right here. How do I know it opened right there? Because it's a green candle, so the price had to close higher than it opened, right? So it opened right here and it closed right here, right? But you can see the long wick. That lets you know that at one point it opened right here and then went all the way down here. Now, why is this important? That lets you know that sellers tried to take control, but what happened is the buyers were too strong and they just forced the price right back up. And usually if you see one of these at the bottom of a downtrend, that's the best place you can see them. That is one of my favorite candlestick patterns that I use for confirmation along with my other confirmations for reversal plays, right? Same thing with, bearish candles, right? So, or a bearish pin bar, or what you can call an inverted hammer. Like I said, the name doesn't matter. As you can see, the price opened up right here. It closed right here. But at one point during the duration of this candle, the buyers pushed it all the way up. But the sellers said, no, ma'am, no, sir, we're coming right back down. So pretty much what this will look like is you have some support, you have resistance, right? You're getting a move up, whatever it is, right? Just you're getting candles all over the place, whatever. Oh, that's not a candle, but you get what I mean. And then what happens is you get a move up, right? You get a move up and it looks bullish. But what happens is, right, let's undo that. The buyers or the sellers say, you know what? I don't think we could let you guys push it up any higher. You push it up long enough. This is already a resistance level. And the sellers push it all the way back down. And then you have this, right? You have this. And then who knows, you may get a few more candles before really, falling back off the face of the planet, right? But you had to move up. You had an inverted hammer at resistance. And then, it lets you know to look for a reversal. And then you got some confirmation. And then we continue to make a move down, right? And it's the same thing on the upside, right? You're going to move down, right? We're moving down. And sometimes it may look like this. Look at this. Check this out, right? Candle opens right here. You get a really bearish candle, right? It blows right through your support, right? And you're like, oh my gosh, this thing's really going to fall. But you let that candle close because you've been watching my other videos. We always let candles close. So what happens is we see that they push the price all the way down here. We wait for that candle to close. And this is what we end up getting at the end of that candle. Look at that. Boom. Buyer or sellers tried to take control, push it past support. Buyer said, nuh-uh, this is where the ride's over for you guys. And you know what we're going to do? We're going to go ahead and reverse this bad boy. Right? And this is just an example. Like I said, you're never going to enter a play based off of one candlestick and that candlestick pattern alone. Never. But this gives you an idea of what to look for with these type of candles. Right? Look at this hammer. Boom. Made a move down. They tried to push. Boom. Buyer step back in. Form that hammer at support. Oh, yeah. We're gone. And remember, the bigger the time frame, the more convincing or the stronger these candlestick patterns are. So if you saw something like this on a weekly time frame, right, and you wait on that next candle for confirmation, they're like, okay, this is going to be a strong reversal because we're on a bigger time frame. But if you see one of these on a 1 minute chart, then it's like, you know, cool if you're a scalper or whatever, but it's not going to hold as much weight as seeing it on the hourly, or on the 4 hour, on the daily, on the weekly, right? And that goes for any one of these patterns, whether it's an engulfing, whether it's a hammer, inverted hammer, or any other candlestick patterns we go through. The bigger the time frame, especially with some when it's near key support or key levels, that's what you want, because that's going to be the money makers right there. I promise, right? So we got the hammers finished up. Let's move on to the dojis. Now, we kind of did this, had an example of this when we started breaking down the anatomy, but pretty much what dojis are, it's indecision. You see a doji, it's indecision. What does indecision mean exactly? It's when the opening price and the closing price are the same price. So you can see at one point, the price went up here. And let me pull out this annotation again. At one point, the price was up here. At one point, the price was down here, but it ended up closing exactly where it opened, as you can see right here, right? Right here, opened down here, and it closed down there. Even though it went all the way up at one point, it closed down here. Opened up here, closed up there, right? Went all the way down there at one point, but it closed. Opened right there, closed right there. Even though it went above and below, it closed right there. Now, like I said, you see a doji, think about indecision or loss of momentum. What do I mean by that? Let's check it out. Right? So we're going to move up. We're going to move up. Whatever. We're going to move up. Next thing you know, you get one of these. That lets you know that the buyers who are pushing the price up have lost momentum. The sellers are stepping in. The buyers are losing steam, meaning that the trend is not as strong, especially since this is at resistance. And then you may see a reversal, right? You may see a reversal because the indecision, right? And I don't want you guys to be tripping. And this is for me. Maybe not everybody will agree with this. I don't know. But I don't care if it's a long leg doji, common, gravestone, dragonfly. If I see one of these bad boys as support or resistance, I'm going to be interested because it represents indecision. Now, I will say gravestone and dragonfly give me the same kind of vibes as, a hammer candle. Not that they imply that there's the same amount of strength there, because a hammer candle, lots of buying pressure, inverted hammer, lots of selling pressure. Obviously, to a certain extent, these represent indecision because the opening price and the closing price are the same. But I would take into account that for a gravestone, you can see that, there was a move up or whatever. And then eventually the buyers tried to push the price higher, but couldn't because the seller stepped in again, right, and pushed the price back down where the price opened for that, or where the candle opened, when there was a new candle there, right? Move up. They had another move up. Boom. Seller said, "No, ma'am, no, sir, you're not going any higher," and they brought it right back down. And as you can see, you can kind of possibly play it as similar to how you would play a hammer candle. And the same way for a dragonfly, right? Seller tried to push price. Buyer said, "No, ma'am, no, sir, this is where your journey ends." And then you get this reversal, right? But when you see dojis, represents indecision. We're losing steam. Nobody's winning, or at least if we were going one direction, then that direction has lost a lot of its steam because it no longer has as much power as it did, or there's not enough fuel there to push them any higher. They're going higher. The sellers lost steam. They're going lower. Doji pops up. Common long leg doji. Boom. The buyers are now stepping in, or causing there to be some, okay, who's going to regain control, buyers or sellers? That's why you kind of wait on the next candle, or depending on what chart you're using, what time frame you're using, the next few candles to really make a decision. Tweezer bottom, tweezer top. Now, this is a pretty simple pattern, really, really easy. Pretty much what this is when you're on a downtrend. Let's say you're in a downtrend right here. Boom. And then what you see here, you have a bearish candle, and then you have a bullish candle right beside it, very similar in size. And what that usually signifies is, especially if it's at support, because you only play these at support or resistance, just like any other candle, right? Had a move down right near support or right at support, bearish candle, and then a bullish candle right beside it. And then usually what you'll get is a nice reversal, right? Wait for some confirmation, obviously, like I've been saying, and then you'll get a nice reversal out of this, right? Simple enough. And then you get, let's say you have a move up, right? Hit resistance right here. You have a bullish candle at resistance, and then the next candle is a bearish candle, very similar in size, very similar in size and shape, and then we have a reversal, right? Tweezer top. That's pretty much what that is. Pretty simple. I don't play this this one often. I don't see them too often, and that's maybe because I don't look for them, but that is a pretty decent pattern, I would say, as well. And then lastly, we have the morning star, evening star. This is probably my favorite pattern. This is very similar to a engulfing, I would say, maybe, kind of, not really. But what this is very similar to, like I said, with the tweezer top, right? We have a move down, right? And then obviously you have this bearish candle that continues to move down. Like I said, support or resistance, or support for a morning star, resistance for an evening star, because this is the bullish reversal pattern. This is the bearish reversal pattern. But you see this right here. This is some support down here. You have a bearish candle. You have in my opinion, it doesn't have to be a bullish or a green candle. It could be a red candle, green candle, whatever. But it's followed by this very bullish candle. Right, very bullish candle. And this is usually what it looks like. Usually looks just like this. The ones I've played have always looked pretty clean. But even if it is different size, like it doesn't have to be the exact same size candle or anything like that. But you usually have a really bearish candle. You have kind of almost an indecision candle right here, and then you have a bullish candle, and then you have this reversal for a morning star. And then down here, or over this side, you have a bullish move, right? We have some resistance right here, because we're not going to, like, this is what we're not doing. We're not doing this. We're not doing this. Oh, look at this. Right? We're not calling this an evening star, because this next candle could just do this, right? Key levels only, guys. Key levels. Key levels. Whether you have a trend, whether you have support resistance, you have a chart pattern, whatever it is. Key levels. Right, you got that resistance level. Boom, we got to move up. You got a bullish candle, like I said, kind of like an indecision candle near resistance, and then you have it followed by a very bearish candle, and then proceed to make a move to the downside. Right, pretty simple, super simple. I really like that pattern as well. That's really all I have, guys. Let's do a quick recap. We have engulfing candle, right? So remember. So at support, at resistance, key levels, trends, whatever you need to find them at, make sure they're at key levels though, right? You got the hammer, pin bar, inverted hammer, and then the hammer candle. One of my favorites, probably my favorite candlestick pattern, definitely for reversals. You got the dojis, indecisions, losing steam, who's going to regain control, tweezer top, tweezer bottom, just a simple bearish reversal or bullish reversal candlestick pattern. Remember, if it's a bullish reversal, it's a bearish candle followed by a very similar looking bullish candle. And if it's a bearish reversal, it's a bullish candle followed by a very similar looking bearish candle, right? And then you have the morning star, evening star. Like I said, don't just try to find these anywhere. Key levels only. Got the bearish candle, indecision, bullish candle, indecision, bearish candle. And once you start mixing in these candlestick patterns with chart patterns and your other, your trend lines and your trends and everything, and the multiple time frame analysis, you'll be unstoppable. You'll be unstoppable, because I'm a price action trader. So I don't rely on a whole bunch of indicators to make me money or to give me an idea of where a stock price is going to go next. I use price action, and a big part of price action is candlesticks, chart patterns, being able to identify trends and all that good stuff. And before we wrap up, say it with me again. Candlestick patterns carry more weight on bigger time frames near key levels. On bigger time frames and near key levels. All right. The name of the candle doesn't matter. Only my understanding of price action. If someone watches this video and you may be upset that I called a pattern something it's not, even though I don't think I did, I don't care. As long as you understand what it's supposed to mean or what it means and what the buyers and sellers are doing, then that's all that matters. All right. So these are the key, just basic candlesticks that I like to use every single day when I trade, or I try to identify every single day when I trade. And I use them to make key decisions along with, other things, other confirmations. If you have any questions, please feel free to leave a comment down below. Join my free Discord, free limited access to my Discord. We're doing really good things in there. A lot of people are making money. It's really dope, really good environment. And that's all I got for you guys. So don't forget to like, subscribe, and I will see you guys in the next video.